Welcome to another episode of TRVC, a podcast where we talk about the Turkish venture capital ecosystem. Our guest today is Gizem Yağız, general partner at 212 NexT, deep tech material science focused fund. Welcome, Gizem.
Thank you for having me.
Thanks for coming on the show. Now, we've had Ali Karabey, who's general partner at 212 in the past. You're under kind of the same umbrella, but really a completely separate fund
True.
at 212 NexT.
Yeah.
But it's great to have you on the show as well. And let's talk about 212 NexT. But I first want to get a sense of your career path, how you got into venture capital, and up to the creation of 212 NexT.
Sure. So I'm a graduate of economics. I'm from Ankara. I was born there and studied up until university in Middle East Technical University. After that, I went to the UK, do my master's, then started working there. I really wanted to get that exposure of working abroad. So I did my best to find opportunities there, and I landed in a utility company there. At one point, so they were part of RWE Group, the utility arm of RWE Group. It was called Thames Water, and I did mergers and acquisitions there. In my junior years, that was my first exposure to this kind of field, if you will. It was an in-house M&A project, was very large because Thames Water was selling off all of their international assets. And it was my junior years. I was responsible for the data rooms and the Q&A with the investors. The lucky part was, I think, because it was early years, it was around 2005-06, there were no digital data rooms.
Wow.
So that meant that I got to travel to all the remote parts of the world, including Asia, to, set up those data rooms and physically be there. And that was, some exposure in itself.
I mean, the information was still on Excel spreadsheets or whatever, but you just had to physically go there and look at on a local network or something.
Exactly. So I got to travel to, the countries, Thailand, Singapore, all the, like Asia and certain other countries, let's say. That's one of the most memorable parts of my experience. Then afterwards, so that was one project, and then Thames Water was sold by RWE to a Macquarie-led consortium. It was even bigger project, and I took part in that as well. So there were like two big deals that I got exposure to. Then I came to Istanbul in 2007, and I joined Pragma Corporate Finance. They're the leading M&A house, M&A firm in Turkey today. And back then, though, again, the M&A ecosystem was not established in Turkey. And I even had the worry that, okay, I had all this experience here in the UK, but, what's next? Is there a corresponding, opportunity in Turkey? But there was, yes, there were M&A houses there. So I joined. And again, in hindsight, I think I was lucky because it was the best years of Turkey in terms of foreign investment.
Before the global financial crisis.
Even during global financial crisis, like 2008, Turkey was doing well because it held strong, I guess. So it kept flowing up until, I don't know up until when, but, I was with Pragma from 2007 to 2012, and that period was very active, and almost all the deals we did had foreign counterparts, so it was all cross-border deals. It was the greatest school. We handled all sectors. Back then, we didn't have the luxury, I guess, to truly specialize on one sector because the sector was still developing.
But industrial mostly, no? Or not so much technology is what I...
No, not so much, yeah. Industrial, but any industry, like from all the infrastructure deals. So we were the first ones to advise on the first PPP project in Turkey. The health PPPs started back then. It was the Kayseri hospitals. So that was all the way from that kind of large infra deals to manufacturing deal, shoe manufacturing, let's say, So it was a large span. It was the greatest school. I learned a lot in many ways. And I think I also built the confidence that one doesn't have to know something to its in every detail in order to progress on it and, create difference in that field.
You mean you don't need to know the details of the that particular industry and business to understand the financials and understand if there's a deal.
Exactly. So you don't have to be experts or be, you don't have to be perfect in a certain field in order to basically work on it and build something useful. Because there, the thinking process we applied was critical thinking and asking the right questions. So
you can learn kind of the unit economics of
exactly.
that industry, of that.
And
business.
in certain cases, we were able to, like open the minds of the people that we were advising by asking those more challenging questions. Obviously, we learned along the way, but, together we formed like an attractive business proposition.
So is that part of the fun of it? I mean, you think of there's a similar kind of thing with management consulting that the idea is you get to, work on all these different projects and different industries and learn different things. Do you have the same sense there of, these people have worked, their whole careers in this industry and I'm getting to, pick their brains and learn all about the...
No, it's a lot of fun. And something else I personally found fun in was the aspect where, because when you first start start a project, let's say, there's a merger or a sales happening. So you turn the page, you start understanding, but there's a lot of raw information floating around. You ask questions, someone tells you something, but not in a perfect shape, and I always felt that it was like solving a puzzle, bringing together all these raw information and put them together and filter.
So that you can prepare the kind of the investment memo for the buying party or whatever.
Memo, exactly.
What's the strength of the business? Where is it going to go? Distill it down to its essence, kind of.
True. Yes, that's the fun part. And even, it's not only for being able to prepare a memo. We always questioned whether this business made sense for us, because ultimately we were going to represent it and, pitch it to certain parties. So we had to make sure that this is something that would be under demand by the counterparty. So it was first for our own understanding and questioning, and then obviously translating it into something understandable. Yeah.
So I'm curious to hear the next steps in your career, because there is somewhat of a difference between doing M&A for, these are fairly established companies, it's sort of kind of like micro private equity type or even...
True.
Typically, I'm thinking just Turkey in those years.
Mid to large size companies. Mostly mid.
And then investing fairly early stage, you don't necessarily have revenue metrics to look at and things. So after Pragma, then I moved on to IFC, part of World Bank Group. There I was with the infrastructure group. So it was like the biggest projects that you can imagine, the infrastructure projects, the electricity distribution networks, gas distribution. Focused on Turkey or the region?
Regional. It was regional. Back then, the second headquarters of IFC was based in Istanbul. It was the second largest country and also the head of the region. So we were based here in Istanbul in Kanyon office. So infrastructure projects, large projects there, and it was more project finance oriented, not so much, we did have the equity tool as well, equity/project finance, but this time I was on the investor seat. And it was an interesting change in mindset because, in advisory, you have clients and, there's an element of gaining clients or presenting yourself. But when I was back on the other side of the table, people were coming to us and, for a while, I really thought I should enjoy that kind of change. So, segue into the venture actually started there for me because the infrastructure department at one point were also responsible for technology investments, which was becoming more popular. And it was around 2012. They said, okay, now, Gizem, you're going to look at venture capital investments as an LP because IFC was the largest LP in emerging markets as a DFI. And we had another venture group internally. So we had a concept called JV. So two departments coming together on a certain project. So I was the infrastructure, person, and then the VC person, started looking at the ecosystem. It was very early times. There was there was no ecosystem basically. And that was a time when we became the first investors of the Earlybird fund, Earlybird Digital East Fund, which was of course then in hindsight a landmark deal.
Yes. Worked out pretty well.
Yes, it did.
They were at one point, their first fund, I think, at top of the Midas list, one of the best funds in...
True. I don't know how many awards or whatever, so they're clearly they've been doing well. So that really was my first exposure, like a peek into the start of the ecosystem, let's say. But we didn't have lawyers, we didn't have the right kind of regulations or accelerators or even our own DFI, like Turkish DFIs were not around. So then after IFC, it was, I moved into like proper startup investing, proper venture. And I joined a technology center where it was its mission was to develop the industry 4.0 technologies in Turkey and in the near region. And there, we wanted to build an arm that supported startups in that area, basically. So that was my real pivot. It wasn't a sudden pivot, but, finally, ultimately, that led me to
At IFC, you were an LP, in funds, and this was kind of more
I'm on the field
investing
now.
directly in startups.
Exactly. So, and then finally, it led me into my current position, which is 212 NexT, and it's been 2 years that we started the fund, or since the first closing.
So tell me about just that transition. How did 212 NexT come about? Were you part of the creation of it, or were you brought along once it was
one day
set up?
Ali Karabey called me and he said there's a new setup.
Did you know each other from IFC days?
Not IFC days, from my other days, from the technology center days. So yeah, there's something cooking. Would you be interested in taking part of it? So that was, how I got to know. And then same thing happened to my partner now, Çağlar Urcan. He also receives a call and then they brought us together.
Wow.
Yeah. And at the time, yes, the idea was there and certain background to it was established. So what we did, we took it.
Was it kind of driven by your anchor LP, or get them as an anchor LP later on?
I think it's a bit both ways. But the anchor LP is, by the way, Akök Holding. So they're
a large chemical. They have different.
They have different subsidiaries, and they have a leading position in certain industries. One being chemicals, Akim, and then the other one is AXA. AXA is the largest acrylic fiber producer in the world globally. Wow. And then there's a carbon fiber business called AXA Carbon. It used to be a JV with Dow Chemicals, and they have other subsidiaries as well. So, they're, very prominent in areas that they take part in. Akök Holding was looking for ways to invest in startups and get exposure to this area. And apparently they had thought and tried few ways. And finally, they decided that the best way to do that was not to do a CVC or invest out of balance sheet randomly, but to do it in conjunction with professionals. So become an LP ultimately. So, and they ask 212 to do that, and there the relationship starts. But of course, the agreement is that this is going to be an independent fund. Are you okay with that? And yeah, everyone shakes hands. There will be other investors. This is going to act like an independent, normal VC fund. And so the visions were aligned. And truly, it's, I think, one of the, rare examples of how a big industrial player plays it, allows it to take its own course and just supporting almost silently, let's say.
It's quite visionary because the other route, as you mentioned, is CVC. Mm-hmm. And there's a wide range of kind of types of CVC too. Some are very strategic, some are very kind of more financial. But I get a sense that it's kind of smart to be a completely independent kind of structure where you're not tied as much to the corporate mindset or something. Yeah. You have a bit more of
I think it's very smart too. And honestly, as investors and similar, we have other industrial investors as well. Looking from an investor lens, I think investors this way are getting best of both worlds because the way we structure the fund or the way we appear towards the startups is that we tell them we bring you industry connections, and we mean it. But what that means for the investors is that they get to access all these technologies in a filtered form. So it's technology access. So it's, even though it's a financial investment for our LPs, it's very clear they want financial returns. But on the side, they're also getting the R&D support or the critical technology support from us.
So just to take a step back, 212 Next is, could you describe, what's the kind of the mandate, the fund size, what you focus on?
So we invest in advanced materials. That's our focus. We invest I'll come to that, what that means. We invest globally. We're an early stage investor. So what that means is from seed to Series A, even though we're flexible. Our tickets are somewhere between $500,000 to $1 million, give and take. So that's where we play. So advanced materials, it sounds niche, but it is a huge area. Actually, when you look at the global GDP, it's the second biggest chunk, materials, after services. So it's big. So what it includes is, think of advanced chemicals, polymers, coatings, metals.
Textiles.
Textiles is the sector that it touches to. So we're sector agnostic in that sense. We are interested in the material and what it does and how much of a performance changer the technology is. Then also the adjacent technologies like recycling, like circular technologies, and also a software component like AI-driven material discovery platforms.
Well, going off a bit on a tangent, you mentioned the circular economy is, obviously producing materials, raw materials has a large carbon footprint. Is sustainability, any part of what you look at, or is it just kind of one of the areas startup can be playing on?
I think it's a symptom of what we look at. It happens. So most of our investments so far also happen to be sustainable investments because, if you think about it, if something, ceteris paribus,
all things equal,
if you improve the performance, let's say if you make a material lighter and apply it in a car, an automobile, then what happens? Then it creates less carbon footprint, that kind of thing. But I guess what I'm trying to say is we start from the unit economics, not sustainability element. Sustainability has to be driven by laws and regulations, and it's unfortunately not yet coming from the users themselves. Simply the users of whatever the subject may be, the textiles or the cars, or they don't push enough, or they don't pay a premium enough to, cause enough demand to push the producers to lean to sustainable alternatives.
But I like that view. Recently I heard this concept of the green discount. You think of it usually as a green premium.
Yeah, okay.
But the idea that it's exactly what you were saying, that if you have, a material that's more performant, you're actually creating something that's better for the environment because you're going to be using less of it. And so that's where you can really get traction. If it's better and it's better for the environment, then people will adopt it very quickly.
That's what we're looking for, really. But we do have clear, in our portfolio, clear sustainable, let's say, technologies, and with price parity.
So, and fund size?
Fund size, we're at 22 million now.
Is it closed, or?
It's
because it's only 2 years.
It's going to be closed, soon.
It'll close soon.
Yeah, we'll see, there's some interested parties, so we're trying to decide the optimum timing.
So 2 years in, you're probably half or a third of the way through your deployment kind of
2 years in, exactly. So it's around 40% has been deployed. 7 startups in portfolio. We plan to deploy at least 80% in the first 4 years.
You're focused globally, and in this advanced materials, how is your deal flow? Since it's not that geographically focused, being in Istanbul doesn't bring you an advantage there. Do you use your industrial kind of LPs as a tool for that? Or, what's your view on deal flow, and how have you seen that go in the first 2 years?
So we looked at it recently. We have analyzed 1,200 startups and, eliminated and filtered them through and invested in 7 of them. The 1,200 is a true number. It's, that means...
You remember each and every one of
It means we have given thought into these. It's not like, it caught our eye somewhere and we, ended
on
up
a list.
like, yeah. So around 60% of this number is coming from Europe. European region, more than 60%.
Do you think, is that kind of by preference or?
It is by preference, yeah, and because it makes sense to do so. About 20% comes from North America, and then the rest of the world, including Turkey. So if we remember our mandate or how we structured ourselves, really we think that we have two hats. Like one is to make investments, and the second is to constitute a bridge between the startups and the industry. And Turkey is an industrial country, so we have a lot of large players that are experts in their own fields, in manufacturing fields. And that's something quite valuable for startups who are in, let's call it deep tech, because one way or the other, someone will need to, either the startup itself or their counterparties will have to build something to manufacture something. So maybe more than ever, what's most precious is that kind of relationship, and preferably very early on to test their technologies, to get feedback, or to, build those relationships for 2 years from now, where they can start a joint project, etc. It's exactly someone or industry to enable their plans forward. So coming back to your question, how our pipeline develops is that once we established ourselves with a very clear mandate that this is how we can help you, and that we're strategically located in Turkey, because that's how we could give you access. And we're practically a European fund. We're literally domiciled in Luxembourg, by the way, so we're a European fund, but we are also a European team because we travel all the time. I mean, what's the difference between living in Germany and flying to France versus living in Istanbul, flying to Germany? So it's all it's close, basically. So with that, the doors have opened quite fast, actually, because then we understood that, we thought that we knew it already, but, it helped us build even better conviction into what we had built, because we had seen interest from startups, from the important deep tech investors in Europe. Once they got to know us, they started passing us deals. When it was about materials, they said, go to 212 NexT. And within the first year, we were able to build some form of name. I can't claim that we have the biggest name, but I think in the right circles, we're known now. Yeah, so... It's
really interesting how you think of in this space that, because Turkey does have a large industrial base, that when you think of technology, the huge technology market is the US for software. And so Turkey plays very differently in that space. It's Turkish startups are looking immediately to, or maybe not immediately, but eventually one path for success is to address the U.S. market. But here at Turkey, having an industrial base in this space, actually, it's interesting for startups to be connected to.
It's the other way around.
Yeah. And it's interesting also that even if it's not just Turkey, but in terms of industrial companies anywhere, the exit path, it seems to me, I'm just guessing, but strategic acquisitions may be quite a bit more attractive exit path here than in software. It does happen in software as well, but perhaps there's
definitely
more interest here.
Sure. In every deal we analyze, we of course ask that question, and strategic exits, I'm seeing the possibility of strategic exits is good for us. The only caveat there is that we need to make sure, of course, that it is not a premature exit, in which case you might not be able to get to the multiples that you're hoping for. But actually, strategic exit is even a better exit form than an IPO if it is done at the right conditions, because the strategic investors will give you the premium, ideally, because they get the synergies out of it, whereas a regular person who's investing in the IPO market will not give you that premium unless it's hyped or something. So, but that means that it needs to be done at a competitive base. So if you, as the exiting startup, going after those players and trying to convince them for an exit, then you might not get the best potential, of course. But if you're well structured and getting a bit of demand, then I think it's the best way to, get the best exit multiples possible.
Interesting. It's still very early on Any exit so far?
No, it's 2 years already. I mean, we need to wait a bit for
and
that.
especially, I mean, is the kind of company life cycles longer in this kind of deep tech investments, would you say?
So actually, McKinsey released a report a few months back, and it says that the time to unicorn by a deep tech company is shorter than time to unicorn by another
Software.
Yeah, software or other, let's say. So, there's one statistics there. But let me tell you, so people are saying it, let's, put it somewhere. But what we observe, the key difference is that you need to wait compared to a regular investment, let's say a software investment. You need to wait a lot to see the first revenues. So patience is the name of the game. So where you see slowness is with the revenues. But what happens there in that period is that you're building milestones. There are certain milestones. So, I mean, you build your first pilot plant, then you upgrade to a commercial demonstration level plant. You secure some offtakes, maybe small, but, which every single thing that, comes one after the other is security.
What do you mean by an offtake?
Commitment to buy your products.
Okay.
But typically through a longer period. So it's like not, one
order, but
not one order, but they say to you, like, for the next 2 years, I commit that I will buy that many tons of your product.
So is one of the key stages there the move from the pilot kind of, what do you call it?
Pilot
factory or
to
whatever,
demonstration to commercial stage.
And it's quite, quantum there. I mean, now
True.
with software and cloud services, you can ramp up as you go,
True.
but if it involves creating a factory, they're lumpy investments.
True, but not always. So there are different business models, and trying to undertake the whole capex by yourself is quite capex heavy, and it's not always the best way to go. It has its own risks because then you need to ask to the same team. You're looking for, the best technical team, the best, the commercially savvy team, and then on top of that, we really don't want to ask the question whether you have had the experience of building a plant, which is typically no. So, but what startups do is that they undertake the first pilot plant, let's say, which is quite manageable, and that's a way to prove their technology and answer to queries from their stakeholders. And then they partner with the right, industry players to jointly develop or license their technology to them, which is why, the structure I mentioned about how we, how we try to serve the startups as a VC comes into play.
So they could partner with potentially one of your LP companies who has a large industrial base and license the technology for them to actually...
On arm's length basis, of course. I mean, the balance there is to form the right type of partnerships, but avoid being captive. So it's always, in certain milestones, there are certain challenges that they need to tackle, and this is one of them, because you want them, but not want them that much in the industry, because at one point you want to be able to sell to everyone, including your partner's competitors, potentially. So there are ways to manage that, but that's the intricacies of any kind of business. It's not a showstopper or anything. So, to go back to your question, this is the main difference between a software investment or a generalist investment, I guess. But once those hurdles are, in the past, then it is a solid business. So you don't necessarily lose sleep at night that much as to what's going to happen to my startup next morning, because it's solid. You know that it addresses the right kind of problems. So the barriers are much higher.
You might have multi-year contracts as well.
Yeah.
Customers.
You're not as threatened by the competition that much, because the competition needs to catch up with you and go through the same hurdles that you have. So the barriers become quite high once you...
Barrier to entry for others.
That's why it's, it feels more secure. But until then, it's on us to keep the excitement and we're not observers. We feel we try to help really with all the right connections. So let's see.
Can you mention as an example either, your latest or your favorite investment? Might not be able to say this is my favorite, but in terms of a funny story or an investment recently that you've done
Yeah,
Who are the founders? What is the company? What do they do? Why did you like them?
Yeah, we announced 2 new investments recently. One is called Haelixa. They're a Swiss company. They're a spin-off out of ETH Zurich. They tackle traceability and in textile, precious metals. So what they do is they created a unique DNA solution that is sprayed onto the material, the core material itself, and then all the way, so which causes it to be traceable until actually, let me put it this way, once it's sprayed and when it becomes a garment, the fashion brand could test it on the spot to see, it's a swab test, to see if it's truly 50% organic content.
Wow.
Or recycled content, because it's marked. The organic cotton is marked there. And it's important for 2 reasons. One is that the brands are liable for their statements and how they present their collection. Organic cotton most of it is coming from India. And unfortunately, 50% of what is claimed as organic cotton is not. That's a big problem. But the liability is on the brands. So they need to make sure that it is actually organic before saying to the customers. So that's one. And then there are regulations. There's a digital product passports are coming. It's already applied on batteries, EV batteries, and now the second wave is on textiles. So you need to create a passport where it belongs, exactly where it comes from, etc. So this technology tackles that, and already big brands are using this technology, the ones that we heard of. It's also done for counterfeit detection tool with the watches and everything. So let's say it's a solid startup. The last one is called Aepnus, and it has one of the founders is Turkish, so it's Turkish diaspora. They tackle also a huge problem, which is so it's a technology to produce caustic soda, and the traditional way to produce is through chloralkaline process, which releases chlorine gas. So it needs to be handled, this chlorine gas, because it's hazardous, it's hard to store, or it's hard to transport, and it's the biggest burden of these producers. So
byproduct of chlorine that's created.
Yeah, and so what they do is they created a technology that is producing the caustic without the chlorine gas, which is huge. And on top of it, they're doing it in a circular form on field. So they create it without the chlorine gas, like you said, and bring other advantages on top of that. And it's...
So that sounds like an advantage for the environment, but it's also cheaper.
Exactly.
You don't have to deal with all the byproduct. You mentioned there's a Turkish diaspora co-founder. Does that play in your deal flow at all, or is it kind of, just, happenstance?
We don't necessarily go out and look for Turkish diaspora. We have different pipeline channels, but I think it's ideal, because, so why not? This is something we would prefer to support the Turkish diaspora out there. And in this case, in Aepnus's case, we and our industry base, there's an expertise that we hold and we're able to bring. So we hope to support the company with the right kind of connections and hopefully, have some contribution in their activities in Turkey, because Turkey also has this problem.
What would you say is, a little bit of a personal question, kind of personally, what is your primary motivation? What do you find the most exciting about the work you do? Is it helping the founders? Is it creating, there's a sustainability aspect to it? Is it advancing science? What would you say it drives you the most?
I think, a few things, but seeing that, I mentioned to you that we want to constitute a bridge between the startups and the industry. The synergetic aspects of whatever I do is a great motivation for me. So whenever, 1 + 1 is more than 2, keeps me excited. And those are, if I have access to something that is valuable, but also hungry for technologies, and if there's someone else out there who's looking for that kind of connection, and if I can enable that, that's a big motivation. So it's the structure of what we do, and also being able to support the startups to the extent we can, and not only in connections but in certain vision building, whatever the needs are. We don't mingle with their daily activities. We of course take a step back, but whenever they ask for it. If it fits with our expertise or some pattern recognition, we're able to help. And seeing that help actually creates an avenue for them to proceed or even sometimes change tracks, then it's also a big motivation. I mean, it just gives me meaning on the question, like, so what? You've done all these things to date, but so what? Is it like going to be investing like in a dry way?
Would you say this kind of deep tech founders can benefit more from support from a fund like yours?
I think so.
And in software, I mean, there's so much content about, software playbooks, and VC funds all say that we have a, value add, but there's just, maybe because I'm further away from the deep tech field, but it seems like perhaps there's more of a value add to be brought there of, how does the milestones you were talking about, how do you get to the next milestone for a pilot plant or those kinds of?
I think so. So the answer to your question is I do think that they, benefit from not us per se, but, a fund like us is able to help more. Why? Because there are not so many funds active in this space. I mean, of course, there are deep tech funds, but like you said, they're not like established frameworks in an investment context, in a VC investment context, and how to merge those two. They're not readily available. Even the deep tech reports are, random to a certain extent. So, that's why I think we're able to establish ourselves as a true player in Europe.
A fund that advanced material startups really want to have on their cap table.
I think so. I mean, it seems like it. So far, looking at our communications with startups, we have, we were left out of certain deals, but, majority of the time we were wanted in the cap table. So it shows us, I think, that we're doing something right, or there's a gap in that space with funds with a clear mandate. I think clarity is important there.
You mentioned your ticket size of between 500,000 and $1 million, roughly. How does that usually play out? Of course, it depends on the stage, but you were talking about seed to Series A, you said. Mm-hmm. Is that usually part of a bigger round, or are you often the lead, or sometimes the lead, or mostly a co-investor?
We can do all of it, so we're flexible there. So it's co-lead or follower has been the case so far. But, what is a lead? What is a call? So the definitions could be blurry. I mean, we find ourselves, if it's an area that we're investing that we're knowledgeable about, our, ecosystem, if we can bring the expertise to the table, then we tend to take the technical lead, and then other investors might bank on our technical analysis. So we're kind of a lead, but it might come together with, maybe it's a scenario where we're not investing the biggest tickets, but because we can bring other things in kind, we're sort of a hybrid lead.
Mm-hmm. You mentioned your technical kind of stamp of approval. Mm-hmm. How do you establish that? You're from more of a finance background.
I'm from a finance background. My partner has a similar background with me, Çağlar. We established a technical committee, mostly made up of the representatives of senior technical representatives of our industry base. It is a real committee. It's not a window committee that we meet every week. We speak frequently, and we designed a structure for that.
So they vet the kind of the technical aspect of the technology.
So it's not a committee to have a say on the ultimate decision making, but we of course use their views on whether to vet the technology or not. So it's quite important. And then when
not every fund has that, so you can bring a kind of a technology conviction to the round.
I mean, without it, it's not easy, I think, or it's like a substandard structure. And it's not only that, so this is like the most intense relationship, that committee is part of our team, basically. That's how we treat it. But then we also have experts that we use per need basis. They're also in time we have vetted them and a trusted advisor network. So we feel covered there.
And it's also, you were saying in your previous M&A experience that there's kind of some of the fundamentals of a business that are independent to some extent from the particular technology. You're also using just general approaches of what's the addressable market.
Of course. Yeah. No, it's always handy. And I think coming from M&A background and also coming from IFC, which has a very high threshold for due diligence. It might take months and months and months to the tiniest detail for a reason, because it needs to be the paving the way and become the stamp of approval for other funds. So the bar needs to be high anyways. So, but I have it like in my blood now, I think in my DNA. Of course, it needs to be softened. You can't keep due diligencing everything, and there's not much to due diligence on anyway, especially when it's early stage. But I think it's very helpful, because if you're asking for high growth businesses, it means that they're going to grow fast and reach a stage where they're no longer startups and scale ups. So you need to assess the team's vision as to, are they ready for it? Are they capable when they're there? So I think it has given me like a broader view and overarching understanding or inquisitiveness into, trying to understand the attractiveness of deals.
Now, you mentioned you have a couple startups with Turkish founders or co-founders, but none of them are Turkish startups per se. I mean, do you see any kind of structural reasons behind that? I mean, what's your view on the Turkish ecosystem when you look at startups coming out of Turkey?
Turkish ecosystem has matured quite considerably. I mean, we're all still talking. It's small, it could be larger, it could be deeper, etc. I think those commentary will continue no matter what, because we're always comparing ourselves to the big brothers. But it's come a long way. Like I said, in 2012, I had a peak into the ecosystem, which was nothing starting. So we're talking slightly over 10 years, which is not long. And the ecosystem has already grown like academia, which means like take gaming, take fintech. We already have anchor deals that gave way to repeat startups that are founded by the graduates of those academia.
We don't really have a sort of a deep tech success story, do we, out of Turkey yet?
Thing is, the difference that we see between Turkey and the rest of the world being like more developed part of the world is, if I have to distill it to one thing, there might be other factors, but it's the level of incentives that are given to these deep tech startups. Because of the challenges that I had mentioned, that you have to wait, and while waiting, without revenues, just imagine it's all external money, and if it's capex heavy, it's not an easy proposition. I mean, once you're done, then it's the best rewards, but until then. So having seen that, like EIC, European Innovation Council, in Europe, last year alone, they've deployed 1.4 billion into these startups as non-dilutive money. So what that means, it helps their survival, because the R&D takes a long time, years. Like when a startup is talking to, by the time they come and present us their seed deal, it is anywhere from 3 years to 6 years, maybe even more, that they had been developing the R&D and technology in the lab. And then when they are talking to us, it's time zero, let's start commercializing. It's a long journey.
The incentives in Turkey there's quite a lot of incentives actually when you think about it in general, from the Science Foundation to BTAC as the Science Council.
There are incentives, true, but not to the extent.
They don't work well for the kind of the...
They're not as large, let's say, because maybe, the comparison is, so we have seen startups, let's say seed stage, it wants to raise 2 million, 3 million, but thus far they had 3 million as non-dilutive funds already. So we don't see those numbers, not in million.
Incentives in Turkey are a lot on tax incentives, so those don't apply when you don't have any revenue.
True. They're at pre-seed or from idea stage to actually, moving that idea startup into seed. I think we do have incentives, like you said. They're at least the startups are not keeping themselves busy to where to work, or what. Sometimes they do have access to, if it's deep tech, there are lab opportunities as well. So it's developing the survival bit. But what we're talking, so if it's seed to Series A, we're talking towards the middle of the journey. Maybe they could do fine, but there you either need big capital. So it's not only us. If we're co-investing, always co-investing with others. So even if you say yes, then who are the others? You need others to also build conviction around the technology to move together. And we don't have also the deep investor base in Turkey to co-invest. We do have some, but definitely not there. They're not as wide as the rest of the market.
And also the sort of early stage investors in Turkey may be focused more on capex light and what they view as
True.
capex
Also,
light.
the opportunities are not that much. True. But maybe in health tech, so it's outside our scope for this fund. But I think there's good opportunities there might be potential for Turkish academia or to commercialize their health tech technologies, which might be a different story than maybe. I don't know, I'm speculating and imagining, but there maybe we might see more infrastructure support from different government organizations or even private hospitals.
Turkey has a large population and so a large healthcare system, so it's also a consumer of these technologies.
Again, it's a similar like three-way setup. It's a teamwork. Like what we have built, a similar structure would be needed in all these deep tech segments, including health tech. But Turkish founders, I think as a whole, one of the best aspects is the resourcefulness of Turkish startups compared to their counterparts elsewhere in terms of how they're using money and keeping control of their runway. I find it, best practices might come from this part of the world. Maybe it's because of our culture, by the way.
Well, also you gain resilience being in a difficult economy.
True.
You learn to roll with the punches, so to speak. Just looking at my cards. Super fascinating to learn about this because there are the differences. So learning a lot of new things about how, we talked about a deep tech startup goes through different kind of growth stages and whether it's longer or shorter. So I feel like you could dive a lot deeper into this. Great to get a bit of a sense of that investment world, but kind of I like to finish on kind of some personal note. Are there any resources, books, or podcasts that you would recommend?
So I have actually, I am not going to recommend this book because I haven't finished it or read it even. No, but it's interesting because I decided we had a little leadership discussion moderated in our team, and it turned out that storytelling is an important leadership aspect, and I decided to become better at it. So I'll see. So I'm reading a book about storytelling. I'm excited about, but no recommendations yet. Maybe.
What's the book?
It's a book called Stories That Stick by Kindra Hall. It came recommended, so I'm looking forward to reading it.
Great.
So that's one. But my favorite book so far is Four Agreements. It's a very simple, tiny, thin book. But the reason I like it is because it simplifies precious qualities as principles that one should adapt. So there are 4 agreements, and it says 4 things. If you get to do them well, then that's what you need in life, kind of philosophy. So one is be impeccable with your words. The second principle is do not take anything personally. Third is do not make assumptions. Fourth is always do your best. Sounds very simple, but I think takes practice to master each. So it's something that I always go back to, and when I want to really go back to basics and try to remind myself what is important, that book helps me a lot.
Wow, I'll check that out as well. 2 great recommendations. And then there's a question that I've stolen from another podcast, a podcast called Invest Like the Best. And it's, what's the kindest thing anyone's ever done for you?
Kindest thing. Actually, this was both kind and a lot of things bundled. When I was 18, my 18th birthday, my auntie, she gave me a gift, and it was her teenage years diary.
Wow.
That she kept for herself. And I don't think anyone had beaten that after all, in terms of gifts and any kind of gesture. So it's just it's the top of my list.
That's amazing to learn from the experience of
and how she trusts me, and because it's very unfiltered. You're a teenager yourself and writing everything as if no one will read it, and then she just gave it to me. And she has, I have cousins, she has daughters, and she gave it to me. Really.
Wow, that's wonderful. Thanks for sharing that. It's a beautiful note to end on. Thanks again for coming on the podcast, and I look forward to seeing great investments from 212 Next.
Thank you so much. Thanks for having me. I enjoyed our conversation.